Donald Trump wants to slash interest rates. Will inflation come roaring back? Or is this time different? After last week's big job revision, it looks like Jerome Powell's long, dark winter of interest rates is finally ending. Futures are now predicting rate cuts could happen as soon as September, so in 5 weeks. They're projecting a 3/4 point cut by the end of the year and a full point cut by the time Jerome Powell's term ends next May. Trump characteristically is pushing harder, even for the 1% interest rates we get whenever Wall Street needs a bailout. The problem with low rates, of course, is they create inflation, because low rates make it cheap to borrow, which is good for consumers and small businesses, but if rates are too low, like say 1%, it fuels too much lending. This funds stupid businesses like Pets.com or fake meat, malinvestments in Austrian economics, but it also drives inflation because commercial banks literally print the money they lend. Now, this has been true for literally centuries of central banking, but interestingly, this time could actually be different, courtesy of a once obscure Fed program called quantitative easing, or QE. Since the 2008 crisis, QE has taken over as the main driver of inflation, with rates playing second fiddle. In fact, during COVID, QE was almost 2/3 of money printing. So quantitative easing is where the Fed literally prints fresh dollars and uses them to buy everything in sight, mainly treasuries and mortgage bonds. It does this to flood money into the economy fast. Rates can normally take 12 or 18 months to kick in. The stuff it buys goes on the Fed's balance sheet, while the trillions of fresh dollars it printed to buy all that stuff swims free, driving up inflation. Now, QE is controversial because it hands those trillions to rich people and Wall Street who own all those treasuries and mortgage bonds that the Fed buys. The poors, in return, get the inflation. So QE started in the 2008 crisis, but during COVID it went supernova, with the Fed buying over $5 trillion in assets, which was a quarter of all the dollars in the world. And that's where the fun starts, because what's bought can be sold. And given all those QE trillions are already built into inflation, the dollars are running around as we speak, the Fed could cut inflation anytime it wants by simply reversing QE. Sell the stash, cancel the dollars. This is called QT, quantitative tightening, and the Fed's been doing it in slow motion, about $40 billion a month, since Biden inflation scared it straight. But the Fed could sell a lot more. In fact, if it sold the entire $5 trillion stash, prices would drop by roughly a quarter. This all means low rates, even goofy ones like 1%, can easily be canceled, pawning the Fed's hoard. Happily, this is precisely the plan of one of Trump's frontrunners to replace Powell, Kevin Warsh, who characterizes it as choosing Main Street over Wall Street, as in Main Street gets cheap mortgages and small business financing, while Wall Street's bonds take a Robin Hood hit. So what's next, brought to you by I Trust Capital. Even with 1% rates, or more likely 3%, QT could cancel enough inflation to get through Trump's term, even with the cheap money boom he wants. Alas, QT eventually runs out, followed by inflation, then the inevitable recession to fight that inflation. A recession that, as always, nobody could have seen it coming. Read the rest with charts and all the gory details at profstange.com. Okay, we'll be watching. See you next time.